Hi everyone, Joel here from Solace Financial. Welcome to your October 2025 Investment and Economic Snapshot, where we take a quick look at what's been happening across markets and what it could mean for your portfolio moving forward. Equity markets had another solid month in October, with gains seen across most regions. Global shares continued to strengthen, supported by encouraging trade developments and strong corporate earnings results. The MSCI World Index rose by about 2% in US dollar terms, while emerging markets outperformed again, particularly across Asia. South Korea and Taiwan led the way, boosted by a new trade pact with the US and continued momentum in artificial intelligence. Here in Australia, the ASX All Ordinaries edged up by about 0.5%, bringing year-to-date returns close to 9%. The Small Ordinaries Index performed even better, up 1.9% for the month. Locally, materials and energy companies were standout performers, helped by geopolitical tensions and a renewed focus on critical minerals. Discussions between the US and China over rare earth exports drove investor interest in the Australian resources sector, while US sanctions on Russian oil suppliers kept energy prices and company earnings well supported. On the flip side, though, the healthcare sector lagged, dragged lower by CSL's earnings downgrade and delays in its vaccine business spin-off. Gold continued its strong run, rallying to record highs above US 4,300 per ounce, before pulling back slightly towards the end of the month. That's a 3.8% gain in October and up more than 45% over the past year. An incredible run, driven largely by safe haven demand and ongoing uncertainty around global inflation and interest rates. Oil prices, however, slipped, down around 2%, as the market weighed the impact of US sanctions on Russian producers and talk of OPEC increasing supply. One of the big stories of the month was critical minerals. China expanded restrictions on rare earth exports, creating supply chain concerns. In response, Australia and the US announced a $4.6 billion partnership in developing new critical mineral projects. That's a big positive outcome for the resource sector going forward. In bond markets, movements were relatively modest. The US Federal Reserve cut interest rates by 25 basis points, bringing its target range down to 3.75% from 4%. Chair Jerome Powell indicated that another rate cut in December isn't guaranteed, as inflation remains above target, even though the labour market is softening. In Australia, government bonds were little changed. The 10-year yield ended in October at 4.31%. However, expectations of a November RBA rate cut evaporated after hotter than expected inflation readings. Australia's headline inflation came in at 3.2%, higher than expected, which keeps it above the RBA's 2 to 3% range. At the same time, unemployment ticked up to 4.5%, pointing to some softening in the labour market. Put together, these numbers suggest the RBA is likely to stay on hold for the rest of 2025, watching to see whether inflation moderates next year. In the US, inflation also surprised slightly higher at around 3%, but the Fed's main concern has shifted towards maintaining employment growth. The latest US-China trade deal saw tariffs reduce and restrictions on rare earth exports lifted, both of which have helped calm markets and improved investor sentiment. Looking ahead, global growth is expected to slow modestly into early 2026. However, ongoing fiscal and monetary support, along with strong corporate balance sheets and increased investment in AI and technology, should help sustain positive momentum. Seasonally, we're entering into typically a stronger period for equity markets. That said, volatility is likely to remain as investors continue to react to inflation and labour market data, especially from the US and Australia. At Solace Financial, we continue to believe that a flexible, well-diversified approach is essential in the current market environment, focusing on quality assets, disciplined strategy, and long-term objectives rather than short-term market moves. To summarise October, global markets performed well, led by emerging markets and US equities. Gold hit record highs, while oil slipped. The Fed cut interest rates, but the RBA held firm. Inflation remains the key driver of policy and market sentiment. As always, if you'd like to discuss how these developments may affect your portfolio or investment strategy, feel free to reach out to myself, either on our website or giving our office a call. Thanks for watching, and we'll see you next month for the November update.